Hello, good evening, everyone. Happy New Year to all of you. Thank you for spending your Thursday evening with us. So please let me know po if clear po ba ako on your end, type C, and type U naman po if unclear. I'll be checking the chat box for your feedback. Type C if I'm coming clear on your end, type U if unclear. Rinig ba ako? Ayun. Thank you so much po, Sir Nelson and Miss Patricia. Good evening to you. But before we start po, no, let me just introduce myself. I am Monneth Pangatungan, Visayas Business Development and Market Education Officer of FirstMetro Securities. It is the stock brokerage arm of the Metro Bank Group. And our company promotes financial literacy and creating awareness on investment opportunities to empower individuals and institutions attain their financial goals. And we envision to be the largest and most trusted Philippine investment solutions partner. It is my honor and pleasure to serve as your host this evening. And just like this event, we used to conduct our sessions on-site and face-to-face. However, due to pandemic, we shifted to a webinar format, but we are glad that we are continuously invited by private institutions, academic institutions, and even public institutions. That is on top of our monthly webinars that we conduct. So with this technology, no, this enables us to add value wherever you are located. So let me know, saan po ba kayo nanonood ngayon ng webinar namin? Are you in Manila, Luzon, Visayas, Mindanao, or outside the Philippines? No, I'm from Cebu, so I'm from Visayas. We have from Pangasinan, Mindanao, there. So actually, in Mindanao, no, we have a couple of Mindanao rounds for this week. So we had Market Outlook in CDO, Butuan, Tagum, and as well as Davao. And for next week also, I will be inviting you. We have a Visayas rounds that on Monday, we will be in Iloilo. Tuesday, that is in Bacolod. Wednesday in Cebu. And Thursday in Tacloban. That is 5 p.m. So you may check your emails. We have invitations for our existing clients and also for non-existing clients of FirstMetroSec. We can share our registration link on the chat box later. So kahit saang sulok man ng mundo, pwede pa rin kayo makisali sa mga webinars natin. So last year, we have actually conducted over 614 talks from basic personal finance to investments. And for this month, no, January being the first month of the year, it's always good to discuss about finances. And thus, we entitled this webinar, Money Matters, New Year, New You, New Fund. And with the new fund, we make sure that whether rain or shine, it unlocks the benefits and all-weather income solution. So we are definitely starting the year right. And we invited a guest speaker from our fund partner, Manulife Investments. So for your questions, simply write your questions on the designated Q&A section of the platform, and we will try to get through as many as we can. And for tonight, we are honored to have Paul Jeffrey Liu. He is a chartered financial analyst, the head of Wealth Solutions of Manulife Investment. He is responsible for the development of new products and collaboration across the organization to identify opportunities and enhancements that will strengthen channels. And he is also responsible for all offshore feeder funds, including the management of cash flows and speaking for those strategies to support the distribution. So let's all welcome Sir Paul. Good evening, Sir Paul. Happy New Year po.
Yes, hello and Happy New Year, everyone. So yeah, I hope you all enjoyed the holidays. It was a very long break for us, and I guess now it's practically the first week of the year. But I'm happy to say that Manulife is offering a new global investment fund, straight out of the new year, and it will soon be available in FundSmart. So Manulife and FirstMetroSec have worked together to provide diversified collection of global investment funds. And we have continued the work and will soon provide this all-weather global fixed income fund that aims to generate income. And as Monet said, whether it's a rainy day or a sunny day, we're hoping to continue generating the income through this fund. Okay. Now, on to the next slide. So before I go into the details of the fund, I want to take a step back a bit and talk about how the current environment actually led us to this new investment opportunity for you clients. So on the next slide, if you're already invested in global funds through FundSmart, you would know that 2024 was another strong year for investments. So nearly all investments, kahit equities, bonds, or money market, all of them delivered strong positive returns. And these returns were driven by favorable factors like resilient economic growth, slowing inflation, yung mga presyo ng mga bilihin bumababa paunti-unti noong 2024. And probably the most important one, the first interest rate cut in almost 5 years. So you can actually see this in the left chart. The US Fed cut interest rates in September. So you could see na the lines there started to move down towards the end of 2024. And other developed markets like Europe, United Kingdom, Canada, they also cut interest rates. The only exception was actually Japan for developed markets. You could see there at the bottom of the left chart, medyo umaakit pa yung interest rates sa Japan because of country-specific factors. But then if you look at the right chart, yung rate cuts, they were happening in other parts of the world as well. Hindi lang siya sa developed markets, pero pati sa Asia, pati sa emerging markets. So actually, if you look at the whole world, about half of the central banks globally started to cut interest rates by the end of 2024. And this includes our very own BSP. So Philippines was also cutting interest rates, and we actually started in August. Now, I'm focusing on interest rates because if you recall your financial lessons way back in college or early parts of your career, you can recall that when interest rates start to go down, that usually means yung mga bond prices, yung mga fixed income prices, they go up. So a fixed income investment today is getting returns from yung mga coupons, yung mga interest that you collect every quarter or every semi-annual period. But now there's also potential for price gains because interest rates are starting to go down. So in this market environment, you actually now have a lot of investors who are starting to take a closer look at fixed income opportunities and fixed income funds again. Okay, so next slide. Actually, before we proceed to the next slide, I think well, we can do a poll question if we want, just to check if people are, absorbing the lesson so far in the presentation. So for our first poll question, which country's central bank cut interest rates in 2024? Was it the US, Canada, Philippines, or all three of these countries? Okay, let's wait for a few more people to answer the poll. So we'll be checking in a bit on some of the slides just to see if people are listening in or absorbing the data that we're presenting. Let's see. Yeah, I think we can end the poll. So most people got it correct. 75% of the people, so still updating, but all of the countries that we mentioned, US, Canada, and Philippines, they started to cut interest rates in 2024. So that was actually a very big driver last year for your good returns in the funds. Almost all central banks were starting to cut interest rates already. So moving to 2025 on the next slide, obviously this is what's important for our investments in the future. 2025 should see a continuation of lower interest rates. So for example, let's go to the US Fed again. In its dot plots, the US Fed is actually expecting long-term interest rates to be around 3%. So that's about 100 basis points, more than 100 basis points actually, lower than where it is today. So there's still a long way to go. There's still a lot of rate cuts that could happen until we reach yung 3% level that the US Fed is expecting. But at the same time, we also think that the path to lower interest rates will be a bit uncertain. And that's because we're getting mixed signals when it comes to economic data. And we all know these central banks will make their decisions based on economic data. They are very data dependent. So as we saw last year in the fourth quarter, there were major events. The US elections, obviously it was a surprise victory for the Trump administration. And you also had over here in Asia, a huge stimulus package from China. And these major events, they can create meaningful changes in expectations. So if you look at the left chart, this shows the economic policy uncertainty index. And you can see at the right, it started to move higher. It actually spiked higher towards the fourth quarter of last year, right when these major events started to happen. Now, this index actually measures the number of news articles that are talking about policy uncertainty, and they track a lot of the leading newspapers. So when you see this chart start to move up, it means more newspapers are starting to write and talk about policy uncertainty. How much rate cuts will there be? How big will the rate cuts be? Whenever they talk about that, and the more they talk about that, this index starts to move higher. And then if you look at the right chart, that shows that these changes in the economic policy uncertainty index actually is happening together with the changes in economic growth expectations. So while global GDP growth, which is that I guess pink line in the middle, has remained pretty much unchanged. It's still at the same levels as where it was at the start of the year. There were actually very big shifts within the countries and the region. So you could see countries like the US, which is the blue line, it started to move higher. People were expecting stronger economic growth because a lot of the policies that they're expecting from the new administration will be pro-US or pro-domestic economy. And at the same time, you could see some of the expectations for Asia and Europe start to go down because we're getting more concerns. What if the trade policies start to impact these economies? Okay, on to the next slide. That actually brings us to the 2025 outlook from our Manulife strategists. So these are teams that sit in our Boston office. So our base case scenario, and when we say base case scenario, that means this is what we think will most likely happen. We think it's going to be a slightly tougher market in 2025, but there will still be plenty of opportunities. We're saying it's a tougher market because 2024 was pretty much a Goldilocks scenario. Strong growth, moderating inflation, interest rate cuts. For 2025, if you look at our scenario assumptions, we expect growth to be a bit below trend. That's because you're dealing with the higher interest rates. Even though we're already seeing rate cuts, interest rates are still high compared to where they were years ago. And that's going to start to be felt in terms of the interest rate burden that consumers or corporates are feeling. So it's going to be a tougher environment for growth, but at the same time, inflation, we think, will continue to ease. And that should give room for central banks again to continue lowering their interest rates, their policy rates in a gradual and orderly manner. So what this means from investors like you and me is that we should be taking a more active approach when it comes to our investments. We now have to navigate the risk and also, take a more active approach so that we can capture the opportunities. And while fixed income will continue to see tailwinds because of the lower interest rates, so again, that means bond prices will typically go up in this scenario, we think investors should actually stay quite flexible. because of all of the uncertainties, and should also avoid taking too much risk because we're still in an environment where growth will slow down. So we want to be in those companies or governments where we're assured that we will be able to collect the interest payments, the principal payments, etc. Okay, so on to the next slide. So this environment actually leads us into our newest fund. So looking at this kind of market environment, we were thinking the Manulife Global Income Feeder Fund, our newest fund, we think it's actually ideal in this type of scenario. Okay. And again, this will be available soon to Fund Smart clients. This fund is a global fixed income fund. It is a feeder fund, meaning it will invest in an existing fund that we already offer globally to other people. And now we're bringing it here for Filipino investors. And the great thing about this is it also has an income payout feature. So you will receive monthly payouts, and we'll get the details later on that. But underneath the hood, underneath the fund, the strategy itself, we actually designed this investment strategy to take advantage of the global fixed income opportunities that we see today. So first of all, it's a high quality global fixed income opportunity. So as mentioned, in a period of slowing growth, we want to invest in governments and companies that will continue to pay the coupons, pay the interest, the principal of the fixed income securities that they issue. We don't want to invest in companies where the cash flows will start to weaken because the economy is slowing. So it's very important in this type of scenario to be invested in these high quality securities. And then the next feature of this fund is that it is an all-weather fixed income solution. So this was alluded to in the title of our presentation that no matter the weather, whether it's rain or shine, this fund is designed to deliver income. So in a period where there's a lot of uncertainty in the macro data, yung economy natin, we don't know how fast or how slow it will grow. The interest rates, we don't know how fast they'll be cutting interest rates. We want a flexible strategy that can have the freedom to invest where the fund manager sees the best fixed income opportunities. And obviously, we also want the fund manager to avoid investing where the risk will eventually emerge. And finally, it's a very complex strategy. It's looking at all types of fixed income securities, different sectors, different subsectors. So we have chosen a strategy that is managed by two very experienced teams in Manulife, and we'll give more details about those teams later on. Okay, but next slide, we'll talk first about the fund being a high quality global fixed income opportunities. So what we mean by this is it has full access to the fixed income universe. You know, typically when we talk about fixed income, we're thinking about government bonds, mga corporate bonds, but actually there's a lot more non-traditional types of fixed income that we can invest in to capitalize on different opportunities and to get a higher potential return. So our fund actually divides the fixed income investments into three buckets. The first is what we call opportunistic credit, but basically that just means this is the portion of the fund which is trying to get you that higher return potential. So the examples of fixed income securities that we invest here are your preferred securities, your investment grade bonds, and from time to time, we will take advantage of also investing in high yield bonds. So this bucket is a bit riskier. It takes credit risk. So that means it's mostly invested in companies. And as we all know, companies are a bit riskier compared to investing in, government securities. But rest assured, we'll be mostly invested in investment grade companies. So these are companies that are rated by the major credit rating agencies like S&P, Fitch, Moody's, and they receive their stamp of approval that these companies are very sound fundamentally and can withstand different markets and economies. Now, the second bucket that we'll be investing in is securitized debt. So this is used by the fund manager to get liquidity, meaning that we can get in and out of these securities very easily because these are highly traded securities. But at the same time, even if we have liquidity, we'll also be receiving a very high yield. So the examples of securitized debt are actually your mortgage-backed securities and your asset-backed securities. Now, I want to stress these are actually relatively safe. They are mostly issued and guaranteed by government agencies, and they are actually backed by the full faith and credit of the national government. They do get a bit of a mixed reputation because of what happened in the global financial crisis, but you can take comfort in knowing that there's been so much reform since 2007 and 2008. These securities are much more transparent than where they were today, and their performance since the global financial crisis up to today, I think, is a stamp of approval in terms of how these securities are now being seen as a very important component of the fixed income universe. And then finally, the last bucket, if you look at to the right, is the US Treasuries. So this is going to be a core position of the strategy. It's there to really provide resiliency and defensiveness to the portfolio. When we talk about fixed income, obviously, these are not for your very aggressive investors. These are for investors who are not willing to take too much equity risk. They want something safer. So we are always going to put a portion in US Treasuries as well. And this portion really is going to be very defensive because US Treasuries, they're issued and guaranteed by national governments. There's very little chance of default, especially in the governments that we invest in, like the US and more of the developed market areas. So with these three buckets, we have enough access to both traditional and non-traditional parts of the fixed income universe to create high and sustainable income, which the fund can then distribute to clients. Now, moving to the next slide, we also want to talk a bit more about this being an all-weather fixed income solution. So the fund has the ability to do what we call dynamic allocation. That means basically it can invest a larger portion of the fund based on the opportunities that they see in the current market environment. So for example, if the fund manager sees opportunities in preferred securities, they can take a big chunk of the portfolio and invest it in preferred securities. They're not limited to just following very strict allocations in the fund. So it's not going to be a fund that will always be invested equally across the three buckets that I mentioned earlier. You can expect the investments to change based on market conditions. So for example, in this chart, we're showing you a typical economic cycle. Usually you have your downturns, your recovery, and your expansion phases. And then around that, you'll see the interest rate cycles, rate cuts and rate hikes. Now, where we are today is we're more or less in that downturn area. We're in a late cycle environment. Growth is slowing down. We're starting to see rate cuts so that it can help support the economy. So in this type of environment, you can expect our fund to position in high quality and defensive assets. That's where we see the opportunities today. But if the market cycle starts to shift, if we go from a downturn to a recovery, so that means economic growth is now starting to speed up. You're seeing rate cuts start to accelerate. We're in the middle of that rate cut cycle. You can then expect this fund to take advantage of new opportunities, which are in the cyclical and riskier assets. We might take a bit of allocation in the high yield space to take advantage of the better interest rates that we can collect from those securities, but we'll still take comfort that these companies will do better in this type of economy where growth is speeding up. And then if we go through the cycle and then we go to the expansion phase, again, there are different ways for the funds to position. If we're in the expansion phase, rate hikes start to happen. That's typically where fixed income funds start to struggle. We can actually invest in floating rate securities here, which is actually very new to the Philippine market. Floating rate securities basically means the interest rates will adjust as rate hikes happen. So if the BSP or the US Fed starts to increase their policy rates, then the interest rates of these securities go up along with them. So it's a way to protect the portfolio. So you can see different types of economic cycle, different types of interest rate cycles. We can actually position the fund to where we want to be. We're going to do dynamic positioning for the fund. And again, that's very important because flexibility will be the key, especially in an environment where there's a lot of uncertainties. Okay, now, next slide, please. And again, this one I'll just go through quickly. It's a very experienced team. You can see it's quite complex. There's so many fixed income securities that the team is looking at, and they have to change, asset allocation as they see fit, depending on the market conditions. So what we actually did is we actually combined the expertise of two very experienced Manulife teams. So to the left, that's called our Core Plus team. This is a fixed income team that takes a look at your investment grade, your securitized debt, your government debt, basically the high quality portion of the fixed income space. That's their expertise. And you can see they have a lot of experience there. 40 years experience, more than 20 years experience. These are veterans in terms of investing in this area. And then to the right, you could see that we took a second team. This is the team that's more focused on the riskier or the fixed income securities, which are higher yielding. So your preferred securities, your high yield bonds. That's their expertise. Again, they are veterans, 20, 30 years of experience. And we told these two teams to work together because we want a diversified solution for our clients. We need them to get access to basically opportunities in all of the fixed income securities. That when you combine these two teams, they're now actually covering the entire opportunity set for fixed income. Okay, so basically that's the three key highlights for the Global Income Feeder Fund. On the next slide, I want to talk a bit about the opportunities actually for the fund that we see in 2025. So again, this is a dynamic fund. It can position in these securities that you see on the screen because it's not, limited to just investing in specific asset classes. It can actually change the allocations to put more money to work in where we see the opportunities. So there's three opportunities we see today. First is in preferred securities. So preferred securities, examples of these would be your junior subordinated debt, your preferred stocks. What we noticed is that in the past 4 rate cut cycles, and excluding GFC because that was a very one-off event. But if you look at the past 4 rate cut cycles, this is the portion of fixed income which tends to outperform. Whether you're looking at 3-month performance, 6-month performance, or 1-year performance, it has outperformed investment grade bonds, US treasuries, mortgage-backed securities, even high-yield bonds. So this is really the place to be if we're seeing the rate cut cycle continue to play out in 2025. So our fund would actually be heavily invested in preferred securities today. But at the same time, we see other opportunities as well, which can help us diversify the portfolio. Another opportunity we see in 2025 is your US mortgage-backed securities. So for agency mortgage-backed securities, we think they offer higher yield, but similar volatility compared to your US treasuries. And again, these are very liquid securities. You can go in and out of these securities. So if you look at the chart, you can see that the yield to maturity, so the yield that you get for investing in mortgage-backed securities is close to 5%. That's about 80 basis points higher compared to US treasuries. But if you look at the bar to the left, you can see that volatility is actually even lower compared to US treasuries. So they're actually not moving as much. The drawdowns are actually quite smaller. So it's actually a very good space to be in right now. And then finally, we see opportunities in US treasuries. Again, we're always going to keep a portion of the fund in US treasuries to give that resiliency to the portfolio. And for this part of the fund, we're just, playing around with duration. We think intermediate duration is going to be the opportunity. Again, we've looked at historical performance. This is the part of the yield curve which tends to outperform. It does better compared to the short end of the range, and it does better compared to longer term bonds. And we've looked at different scenarios, which you can see in the table here. You are seeing excess returns of close to 2% in most periods if you position in intermediate duration rather than other duration profiles. So expect our fund to be invested heavily in these three types of fixed income securities. And that's how we're going to generate the income for 2025. Okay, next slide, please. Yeah, this is just basically a summary slide of the fund that we're going to be offering soon in FundSmart. So again, Global Income Feeder Fund, that's the name of the fund. It's actually a feeder fund, so there is an existing target fund that we're going to be investing in. That's called the Manulife Global Fund USD Income Fund. It's been around for a long time. It's being sold all over the world already, and now we're introducing it to the Philippines. It has a distributing feature, which is, I think, something that's very appealing to most people. So whenever it collects income, we will pay it out to the customers, to the clients, to the investors. So the first distribution will actually happen in April 2025. Any income that it receives prior, it's going to accumulate to the fund snap. So we're going to build up the fund snap to make sure, it's kind of ready, kind of steady before we do our first distribution in April. But then after that, it's going to be paying out on a monthly basis. And then just some other details on the fund. Trust fee will be 1.5% per annum. You can purchase this fund both in US dollars or Philippine peso unhedged share classes. So whether you're a peso investor or a dollar investor, you can get access to this global investment. The minimums are quite low. For dollars, it's $1,000. For pesos, 1,000 pesos. Okay, no minimum holding period, no early redemption charge. And again, this is a Manulife strategy, and it's being managed by our teams in Boston who are very good experts in the fixed income space. Okay, with that, I think I can turn you back over to Monneth for the next part of.
Please, let's just check, no. Okay, so we have this question. What makes the newest fund, Manulife Global Income Feeder Fund, a great investment in 2025? Is it because it's high quality global income opportunities? Letter B, all weather fixed income solution. Letter C, or the third option, backed by an experienced team. Or letter D, all of the above. So all of our attendees got it correctly. So they really listened, Sir Paul, to the entire presentation. So thank you for that. And for the last question. Next question, please. There. So what is the minimum investment for Manulife Global Income Feeder Fund? Is it 1,000 pesos for the peso and then $100 for the dollar? Or is it 2,000 pesos and then $200, or 3,000 pesos or $300, or lastly 5,000 pesos or $500? Okay, so all of the answers correct. Thank you so much for your participation, dear attendee. Okay, there. So of course, Sir Paul already shared the 2025 market outlook of Manulife, and as well as how the newest fund is able to strategize for the opportunities this 2025. And I know you would already wonder how to invest in the newest Manulife fund. So soon, this will be part of the FundSmart of First Metro Securities. But for now, you still need to have a FirstMetroSec account. So if you still don't have a FirstMetroSec account, you make sure the first thing that you need to do, of course, is to have a powerful investment account with First Metro Securities, your one-stop shop for all of your investment needs, from stocks, REITs, ETFs, mutual funds, bonds, and as well as UITF. such as Manulife. And aside from being a powerful investment account, you make sure to partner with the best, as we have been awarded as the best one-stop shop solutions for leading funds by the International Business Magazine, aside from the best online broker and best online trading platform for 7 years in a row. So how do you open a FirstMetroSec account? It can be done through our website. Just visit www.firstmetrosec.com.ph, fill out our application form online and upload the necessary documents. We have the tax identification number, proof of residence, proof of bank account, government issued ID, and your 1,000 pesos initial deposit. And please indicate seminar code Money Matters. And I will share to you the video.
Trading on the go? Here's FirstMetroSec Go for you. Easily open your account today with this app. You can download the FirstMetroSec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. The minimum 5,000 pesos or $100 can be used to invest in stocks, funds, and bonds. There is no maintaining balance required. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. We're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. All the options and convenience within your reach through International Finance's best online broker and best online trading platform for 4 years in a row. With FirstMetroSec, it's your future first.
Right now, the initial deposit requirement is only 1,000 pesos. So once you have your activated FirstMetroSec account, you just need to log in to your FirstMetroSec via our website so that you can access FundSmart. And then on the landing page, you click the Fund tab on the upper right. So if this is the first time that you will access the FundSmart, kindly click update risk profile or update my risk profile so that you will answer all of the questions and then identify what is your risk profile and recommend what are the suitable funds for you. And then you click FundSmart and you will see all of our providers and choose Manulife Investment Management Trust Corporation or Manulife Investment. And you may also click the description tab. This will show all of the fund size and the start date of the funds. You can also sort the biggest fund size or the oldest UITF of Manulife. You may also check the performance of the different funds, 3 years, 5 years, and 1 year change performance, and as well as year-to-date change. And you can also see the fee structure, what is the minimum investment, additional investment, and as well as the turnaround time for the settlement of each fund. So, for example, if you choose already one fund, we have this Manulife India Equity Feeder Fund. It will show all of the information about this fund. And then you just click subscribe if you are already decided, and after which you indicate the amount. Oops. And then click again the tab subscribe. There. And you will see in your portfolio under funds. There. And another benefit of investing pooled funds through FundSmart is you make the most of your money because you will be paying zero. It means walang sales load, walang commission, and walang transaction fee. So these costs are almost considered standard when you buy pooled funds direct from the source or even the banks or the branches. But because you are doing this on your own and online, you get charged with nothing. So you only end up paying their fund management fees. So another big reason bakit maganda mag-invest through FirstMetroSec FundSmart. And you may also consider another strategy, we call it peso cost averaging strategy, wherein you constantly invest monthly. So it may sound easy to execute at first, but it's challenging to maintain the discipline consistently. So save yourself time and effort in growing your portfolio by automatically investing in Manulife through our voluntary investment program. So this voluntary investment program encourages disciplined investing, promotes automatic diversification, and make investing hassle-free. So no need for you to post buy orders or on your own, and investment can be sold or redeemed anytime. So to get started, you need to decide on 3 things. First, how much to invest. Second, how frequent is it? Once or twice a month? It can be on the 15th or 30th of the month, every payroll nyo. And third, where to invest. So just fund your account regularly, and the amount will be deducted automatically from your buying power on debit day. And feel free to connect with us in social media channels. Just search at FirstMetroSec. You can scan the QR code or screenshot of the slide, and check our main website at www.firstmetrosec.com.ph. And for inquiries and concern, you may email us at customerservice@firstmetrosec.com.ph. And again, I'm inviting you for our on-site market outlook events in Visayas, January in Iloilo City, January 14 in Bacolod City, January 15 in Cebu City, and January 16 in Tacloban. So see you there. You may just check the registration link on the chat box. And lastly, for customized, gamified, award-winning market education programs exclusively designed for your company, school, or organization, just send us a formal invite at marketeducation@firstmetrosec.com.ph. And now at this juncture, may I once again call our speaker to turn on his mic and camera as we accommodate questions from our attendees. So let me just check our questions. Okay, so I have received a question through the chat box. Hold on for a second. There. So what makes Manulife Global Income Feeder Fund unique among the other existing Manulife funds, Sir Paul?
Well, actually, Manulife Global Income Feeder Fund is our first global fixed income strategy or a global bond strategy. So if you look at our other income paying funds, we have Asia bonds, we have preferred securities, but these tend to be more concentrated in specific parts of the fixed income space. So for Global Income Feeder Fund, it's more diversified because it's global and it can invest in all types of fixed income securities. So what that means for the investor is that when we looked at the historical performance and when we're actually looking at our forward-looking expectations, we think this will be the least volatile and the safest option among all our income-paying funds of Manulife.
Thank you for that, Sir Paul. So speaking of income-paying funds on Manulife, how frequent is the payout of this newest fund?
Oh, yeah. So, this one is an income-paying fund. It's going to have its first payout in April 2025. So from now until March, we're gonna be accumulating the dividends. And the income, it's gonna be accrued to the fund's NAV, and then come April 2025, we'll start the regular monthly income distribution for the fund. So that means whatever income we collect in the previous month, we're gonna pay out in the following month. So we're gonna do it monthly, starting
Okay.
April 2025.
So for example, Sir Paul, I will invest around February or March. So it means I'm still entitled of the dividend that was accumulated January.
Well, so for example, we're collecting income from, let's say, January to March. That's just gonna be retained in the NAV pool of the fund. So you can expect
Ah,
the pool to start going up. But then
okay.
come April, we're gonna pay out the income we received in March. And then in the following months, let's say May, we're gonna pay out the income that we received in April. And that
I
will
see.
continue going forward.
Got it. So it's still embedded in the NAV. So
Yeah.
next question. You actually shared about the target fund of the Manulife Global Fund, which is USD Income Fund Class I3A. So can you share what's the historical performance of this target fund?
Yeah, sure. So actually the target fund has been around for quite a long time. I think since 2007. So that's almost 20 years. But before it was a plain vanilla fixed income fund. So it wasn't as complex or as um it's not like the strategy that we described it today. So when we had the two teams combining to create this newer strategy, we did that I think late 2023, so around December 2023. So what's more relevant is really the shorter performance of this fund. So in the past year, and this is as of September 30, the fund was able to generate 13% returns. That's in US dollars. 2024 year to date, as of September 30, it also generated about 6% return. So it's been generating very good positive returns so far. It's been able to capitalize better on the fixed income markets ever since we tweaked and we upgraded the strategy.
I think this is shown on the screen.
Oh, and the one that you're showing on the screen is really
Is it?
it's how the portfolio looks today. So you can see we're seeing a lot of opportunities in the US. That's why there's a big allocation to United States today. It's a very strong, resilient economy. Sector-wise, as I mentioned, we're going to be heavily invested in preferred securities, securitized debt, and US Treasuries. Those are the three opportunities we see today. That can change over time if wherever we see the opportunities. And then I think on the slide, just check. There should be a slide, I think somewhere. I think after this slide, it might have the performance. But again, I can just verbalize it. 1 year, it was 13% return. Year to date, it was 6%. And this is as of September 30, 2024.
Thank you for that, Sir Paul. Let me just check the chat box if there are other questions. On the Q&A, none. But here's a chat box. I think I have answered this earlier, but let me just reiterate this. How much minimum funds, or I think how much is the minimum investment for the newest fund of Manulife?
Yes. So it's quite affordable. For Philippine peso investors, it's 1,000 pesos. And then after that, if you're gonna top up, it's also another 1,000 pesos minimum. For dollar investors, your first subscription is $1,000, but you can top up $100 after that. So it's very affordable for a global investment fund.
Okay, thank you for that, Sir Paul. So I guess that sums up our Q&A portion. So thank you so much for the attendees who sent their questions, and Sir Paul for gamely answering the questions of our webinar attendees for this evening. So let me just show as well our feedback form. So to our attendees, we also value your feedback. You can share your thoughts and experiences with us by scanning the QR code and answer our feedback form. Link will also be shared by our chat moderator, Tim. And your input is essential in helping us improve our services and better meet your needs. So we appreciate your contribution and look forward on implementing positive changes based on your valuable feedback. So again, thank you so much, Sir Paul, and we look forward to our next collaboration as we continue to serve the Filipino investors. Perhaps you have some parting words before for our audience before we formally close this event.
Yeah, I think just, tying back to our outlook, this year, yeah, take a more active approach with your investments. It might not be as easy as 2024, but definitely the opportunities are there. And Manulife, along with the other fund providers that FirstMetroSec gives access to through FundSmart, gives you really the opportunity to diversify your investment portfolio. That's really the way that you can, capitalize best on these investment opportunities.
So there you have it. Thank you, Sir Paul. Once again, on behalf of First Metro Securities Brokerage Corporation, I would like to express my deepest gratitude to Sir Paul of Manulife Investments for gracing us with his time and presence. So it is truly an evening well spent. Thank you also to everyone who attended tonight. We sincerely hope you learned a lot and that these insights and lessons will make your investment journey not just more profitable, but also more enjoyable. And please don't forget to provide feedback for today's webinar. We hope to see you again in our future learning events because over here at First Metro Securities, we put your future first. Have a great evening, everyone. Bye. Bye, Sir Paul.
Thank you and good evening.